Good afternoon, everybody. It's Brian Caprice, and welcome to today's current market analysis and identifying potential opportunities. Um, Hopefully, many of you are back in here for a second round today. Today, we're going to go through getting basically the full breakdown of everything. You guys have attended these in the past. It's December. December is always a little bit different trading-wise. And again, we'll go through and see what we can find for the week. This is actually a pretty slow week, and I'll show you that in 1 second. But we'll roll from there. So can't believe it's like December 8th already. Like 2021 is literally a stone's throw away. It's going to be the holiday season, Christmas, all the other holidays associated with that time frame here in literally 2 weeks. I can't believe it that we're already kind of like, I can say this, 2 weeks from Christmas. It's unbelievable. So with that said, let's just jump into things. There's a lot to cover today. I want to make sure we talk about some of the larger time frame stuff. So for those of you that don't know me, I'm the president and CEO of Keep Trading Simple. It's an education company based around keeping basically analysis as simple as possible. There's a lot of distractions out there, and I found those distractions from basically starting to trade. I hate to say this, but 20 years ago. I've seen tech bubble bursts. I've seen housing bubble bursts. I've seen up, down, left, right, sideways. I started just like the average retail trader. Back then, there was really no internet, not the way that there is right now. But I went to, got books and went to seminars and things like that, tried to learn how to trade, and basically learned all the wrong things to do through my process. But started with traditional options, stocks, found Forex, got into futures. I became a financial advisor, learned kind of the inside workings of how the market works. Learned a lot about bonds in there. I didn't know that stuff from the outside, and really how big of a market that was and how popular, really how powerful it was. Because again, I paid no attention to it because that's not what retail traders are taught to do. Created a number of different courses, associated to kind of Nadex trading. I really like Nadex because, for one of the biggest things for me is again, the limited risk entries, or the predefined risk. I love knowing what the maximum risk is going in, and no matter what happens, that's the most you can lose. And again, a lot of my courses are based off of that. I'm very big into risk to reward ratios. You guys will see that in today's presentation. Just a caveat, I do trade a little bit differently than most people. I'm not using MACDs and all the standard indicators that you're told to use. I am a price action / supply and demand trader. So if you are new, you will see horizontal rectangles and some prices, and that's about it. You don't really see much more than that in my chart. So if you're looking for this for the first time and you're like, wait, where are all the lines, the moving average crossovers, and all that stuff? I don't really use any of that stuff. Again, I'm using price action to tell me where potential entries are. So with that said, let me cover the risk disclaimer real quick. For those of you who are new to this, trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost at another transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Nadex is a registered trademark of the IG Group. So today's agenda is going to be, our typical, right? We're going to cover the upcoming news events or lack of upcoming news events. We're going to cover the indices, we'll cover Forex, and then we will break down commodities, all right? And again, we'll review kind of what we covered last week. Now, let me bring this across. Let me find it right there. Hopefully you guys can all see this. So this is kind of currently where we're sitting right now. I can blow this up maybe just a little bit. It's already a little bit bigger. There we go. Maybe that makes it a little bit easier for you guys to see. But right now, you guys can see that I typically use this website and this 24-hour pip change as kind of a gauge to what's moving. Well, right now, even though we've had some absolutely just blockbuster data, nothing is moving. All of these are very, 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 very minor as far as the 24-hour pip change goes, well under what its daily ATR is. So it's one of those things where, as much data as we've seen today, when I say data, I'm talking specifically about Brexit, and I'll cover that in a second. This is not a whole lot of movement. Again, the dollar is more or less flat. The euro, again, more or less flat. It's moving a little bit here, but again, this is a little dollar strength kicking in. Dollar strength kicking in on the dollar CAD, and we've seen this one kind of beat all the way down and finally bouncing off a level that we've talked about. I'll show you that one. This is actually pretty interesting. I drew this pattern for this group last week, and it followed the pattern, went down, bounced off the level, and now it's popped up. But not anything that's, astronomically huge. Aussie's had a little bit in here, and again, we've seen gold kind of bounce around a bit. And then obviously we get over here and we're dealing with the pound. And it looks like there's not a lot of movement. And again, it's because we've had a lot of movement and then an emotional retrace back again, right? Um, Something that we've talked about as well. So as far as the news, what am I mentioning? Basically Brexit. We are literally at the edge of the cliff for Brexit right now. The last data that we got, or last news headline we got, was the announcement of an agreement in principle. Now this is huge. Brexit has been going on for almost 5 years. Like it says 4 years, like 7 months, something like that. I actually have a friend, that she's an amazing trader, but she's followed this for all 4 years, from beforehand all the way through. It's been amazing. She would be considered like the expert. Follows it more closely than I do. I just follow it when there's a lot of movement quickly. She's been following all the little details, but it's been 4 years, and literally the hard exit's about to come. And now, earlier today, you can say that I'm always hopeful, but let's be honest. Whenever the head honcho says I'm always hopeful, but I got to be honest, not normally a good thing. But at this point, we've had other data come in. We've dropped the treaty. The the treaty breakers are out. Again, trying to work some of the fishing stuff around. But again, there's an agreement in principle. So now the data is being taken back. It's going back to the head political parties and the main kind of true voting board to say, hey, listen, we have an agreement. We need to sign it. If not, it's hard Brexit. So I still am a firm believer that this deal will get done. Once it is officially done, I do believe we will see another spike, because then it's done. Right now, it's not there yet, but we're seeing the pound obviously reacting from it today. I think in a 15-minute candle on, I think it was the pound yen, we had 103 pips in less than 5 minutes. So again, huge movement. And again, we kind of expected that. If you guys were on yesterday, I expected the Brexit news to come today, because tomorrow is considered, like, if we can't get it done by tomorrow on Wednesday, we're done. That's it. There's nothing that's going to happen. So I expected actually news today at the 20th hour. And again, this in principle is going to go back and they got to still sign it. But today is the day that I had assumed that it was going to kick in. So that's kind of where we're at right now with this. As far as news goes, you can see there is nada today. And again, why the markets are so slow. In fact, when we look for the entire week, and again, I have just the highest and the medium rates up, impacts up there. You can see tomorrow is also pretty much a dead day. Now we do have oil inventory reports tomorrow at 10:30, and that's obviously a tradable. Event. We do like that one a lot, especially the way that oil has been kind of going crazy, right? We got all the way up to 46, and now we're back down to 45, 45.56. So it is definitely pushing down. Now on Thursday we had this EU economic summit, and that could make some interesting headlines talking about stimulus. So we just saw a stimulus package put forward for Japan, and it's huge. Okay, it's huge. Now, Japan is a countercurrency, not necessarily one of the driving factors. But if the the European Union puts up a stimulus package on par with what Japan did, there's going to be some Aussie movement. And again, that's going to come from this economic summit. Now, at 7:45 tomorrow morning, we do have this monetary policy. It's already at zero, so they're not cutting us anymore. But again, the monetary policy statement should be pretty interesting to see kind of what they're thinking. And again, that may foreshadow what this kind of surplus packet, not, just stimulus package really more than anything else, what it's going to look like. And then 8:30, we had the Ecb Press Conference, and that will be kind of, some unscripted kind of questions that we may get that people are unsure what they said here. And then we have CPI data, core CPI, and then unemployment claims. And this is all Thursday morning, all right? Unemployment claims number, I think, is going to be interesting. I mean, last week, it was not as bad as what we had forecast. It was horrible the week before. Not as bad last week. And again, we have seasonal employees and things like that coming in right now. So that is definitely starting to obviously come into play. These seasonal workers. I mean, not that people are flocking to malls and things like that, but they're definitely seasonal workers that are brought online in December. And then again, that will affect the unemployment claim number. The CPI, I think, is also interesting. And you can see this is basically, it's a, consumer prices account for a majority of overall inflation, right? Inflation is very important with what we have going on with rates right now. This is actually the first tick up of inflation that we've really seen. I mean, there's a little bit here, but it came in as forecast, and there's a little bit here. So we're looking for, any sign that inflation is starting to creep in. And again, this is what all the gold hawks are looking for. They're like, hey, waiting on inflation, give us some stimulus, let's go. and we didn't really get anything at all last month, right? So it's supposed to be 0.1. That's kind of a safe assumption. They have a mandate to, get it up a bit higher. We're not quite there yet. So yeah, we'll see month over month how this is. If this is a disappointing number, I think this could be a big kind of pothole for gold. Now again, maybe it's good. Maybe we come in at a 0.3, be a huge supply, huge surprising, inflation come in. And again, that would also give gold a nice little bounce. And we've had a bounce earlier this week, actually yesterday in gold. So it's going to be very, very interesting to see what happens here with the CPI number. Now on Friday, again, we have the Euro Summit. Again, it's the kind of the ending of the EU Economic Summit and then the Euro Summit. So it is an all-day event. We will get some headlines from that as well. And then again, you can see this here, day 2 of the EU Economic Summit. Lots of talking, right? Lots of talking. And then obviously some core PPI and PPI month-over-month data. And that will also provide some room for the dollar. But besides that, it is a very, again, I've used this term in the past, it's a very anemic week as far as news goes. I mean, a lot of this is speeches, right? I mean, speech here, press conference is kind of associated with this. This is an economic summit. You remove that, we have one rate here, and 2 U.S. news releases. So four real actual releases for the week. That's not that much. And again, that's December trading. That's what can happen. We're going to start seeing the volume start to kind of decline and start dropping as we get deeper into December, which could also lead to some great trading opportunities. Don't hear me wrong here. But it's just something we need to keep on our radar. So with that said, let's go over the charts. As I said, not much going on. None of the news over here is great. I think the last week Nancy Pelosi was trying to get something going on. But right now there's really not a whole lot here. Economic pessimism, despite vaccine news, it's great. Clicking this right here, you can see that we drop below, despite Pfizer and Moderna trials. Yeah, I mean the realization is, yeah, it's great that we have a vaccine, but nobody, no average person is going to have access to it for months and months and months. So more can definitely happen. So yeah, and they talk about this optimism index registered 49, dipping 1 point below the neutral at 50. So that's not really a good sign either. But this is, we've mentioned this for the last couple of weeks. Just the vaccine trials are great. It's not here yet, and the amount that they can actually produce in that time frame. Talking about, I don't know if you guys saw this or not, but before Pfizer had cut their production guidelines of what they could produce, they were talking about being able to produce 21,000 doses a month. With the amount of kind of frontline workers, and again, Pfizer has since, because of shipping and things like that, they have lowered that, I guess. I don't know the exact amount. But before at 21,000, just with nursing home and frontline, I guess they say that there's 107 million kind of emergency frontline workers. So I mean, it would take, just with the 2 doses that they need, it would take 3, 4, maybe even 5 months just to get them out there. And again, I think that's what the market is starting to see now. That, hey, listen, yes, we have these, but where is it going to be available? Who's going to get it? I think that's the big thing that's starting to set in. All right, and that's why we're seeing some negativity here inside of things, especially like the Dow, and as well as record highs. Look at COVID. Pretty much, I mean, there's a few states where it's not at all-time highs, but many states out there, we're now hitting all-time highs in new cases in the last 7 days. And yeah, not good. I mean, a vaccine's great, but it's not going to help any of the people that are currently getting right now, and that may lead to more shutdowns over the over the holidays. Okay, so let's go into charts. We'll start off with the indices over here. So here's NQ for the day. So this is a 30-minute chart. You can see that we've had levels kind of top and bottom marked off. We had this level before, and on Monday morning, I talked about kind of a new high being put in. And again, we were looking for that failure to go higher. We like the pattern. We like to push up. And you can see we not only hit it once, but if I extend this across, and again, the bottom doesn't change, we've hit it a second time, and now we're up here for the third and starting to have some issues, right? Over the last couple of hours, everything has been great, right? We punched higher. We've kind of bounced from the low. But right now, I would say, what type of catalyst do we have that we can drive the market higher? Now, news of any type of stimulus package would obviously be great. And again, more people having money would be wonderful. I think that the NQ is in a special situation right now compared to the S&P and the Dow because it's December time. We have the holidays. I believe right now, because malls and things like that are shut down and closing their business, anything that is online and technology based is going to be the hot item. Okay, all those things help out the NQ. So If we get stimulus, they're going to spend it. It helps the NQ. If COVID gets worse, which again we're seeing right now, we need to rely on technology. NQ will tend to do better. So if we are looking for any type of burst higher, I would say that the NQ is probably the play. Right now, with any lack of news, again, this has been two different trade setups for shorts here, actually maybe a third if you took it off this level, but it's been a level that's been pretty consistent. Again, we can drop it even lower if you want to look for confirmation, but without any lack of, great, wonderful news, again, I could see this kind of coming back down and floating back in the, I don't know, maybe the 12,500 range. Maybe 12,550-ish. We need some type of catalyst to be able to break higher, right? I mean, sellers stepped in, sellers stepped in, sellers stepped in, and you're seeing sellers already start to step in a little bit here. It just needs some type of an oomph to go higher, right? We need something positive. And with lack of that positivity, I think we will come back kind of back into the mean of, back into this, 12,550-ish range probably. So I'm kind of thinking bearish this one right now. But again, 12 o'clock, people are at lunch in New York, so we'll see how this one rolls over. Now, S&P, you can see, has had a much higher grind. Now, is it all the way back up again? No. I mean, it's sitting right here. We've had this level marked off, this 36 kind of, I mean, really the 37-ish range. Again, strong push up today, right? So far this morning. The birds seem to like this one. Strong push, but kind of the same thinking, until stimulus is officially here or COVID numbers are down or, the FDA approves it, everybody will have a vaccine in 30 days type thing. Again, I almost feel like this is more just short covering than anything else because none of the data out there is necessarily positive, and we're not even really seeing any true U.S. economic data besides what we're being, kind of driven from the news. So, again, COVID cases are rising. 7-day totals are absolutely horrible. Again, the only thing that would kind of help prop this up is, hey, listen, everything is so bad. We need to have stimulus. We need to have stimulus. Give us stimulus, right? Everything is horrible. But yeah, it just shows that there's a huge disconnect between the stock market and the actual, quote, economy. Okay. But again, up at another level here that there could be an interesting rollover. Okay. Now, the Dow is also punched up higher. Now, the Dow is the one that I feel is the most at risk to go into the downside because the worse COVID gets, the worse the Dow will typically be. Now, it's had a great pop. I mean, really since since early morning, right? Since what? About 6, 7 o'clock this morning, we pushed down and it did grab a small zone. And this is a zone that I believe we had marked off. But you can see that the zone is sitting kind of right here. And again, we've got a test here. That's what it kind of turned off of this morning. I'm kind of looking for 30, 234 up top, and really the 29,807-ish at the bottom. I'm kind of using that, and again, you guys hear me use this term all the time, but I'm kind of using this as kind of my trading area right now as far as, really true tops and bottoms and where my kind of, my bias is. So, I mean, where we are right now, I would say, if this is our middle 30%, I would say, I mean, we're in this top section. Yeah, could it go to all-time highs with news of a past stimulus and additional, $1,200 checks going to Americans? Sure, absolutely, and it will. But right now, I have to say I'm kind of going back into that bearish mindset. I mean, the NQ is at a level where sellers have stepped in. The S&P is in an area where sellers have stepped in. The Dow is now at a level, although I prefer it a little bit higher versus just this level. But this is a level where sellers have stepped in here and sellers have stepped in here in the past, and we've seen very strong reactions off of it. And again, very, very fast movement, very high angle. We're coming up and we're basing in it now. So, if it does it again, would I be surprised? No, not really. But I would like to get up just a bit higher, and I think that's a little bit better of a zone going here, at least until we hear stimulus. And then once stimulus comes out, expect a large pop, and then I'm going to be looking to retrace that one back to the downside because I don't think the economy or the United States in general is great. Sending money as a temporary fix, again, would lead us to an emotional bounce higher, and I'd be looking to for some type of parabolic retracement back lower. So that's where the Dow is. Now currencies are going to be a little bit more boring. Here's our 30-minute, and again, we've had levels up here. You guys know that this is where we're at on the curve, and we've been looking for shorts, right? We've been looking for shorts. Yesterday, we mentioned one, and, it didn't really hit a level, unfortunately. We were looking for shorts at 74.60. It kind of got up, and you can see, here, I'll click it in here. This bit of movement, again, here's their 3 o'clock candle, okay? It just goes to show that really, this early morning, here's 3 o'clock right here where this big move happened. Big push down. By 5 o'clock, it was already rolling and turning back up again. This is the type of response that we've had. Big moves, but then we retrace back. Okay, so we've really been in the same area since December 2nd. So for 6 days, we're at the exact same price that we were 6 days ago. And are we really hitting anything kind of earth-shattering? Not really. And even on a 30-minute, there hasn't been really many places to get entries, right? I mean, we've had short orders, we've had alerts up at 74.60, but really nothing. And now we have some consolidation. This is a lack of data for either Australia or the US, and that's kind of what we're dealing with. But if we push down, could there be a potential long here at the UK Open tomorrow? Sure, there could be at 73.84. Likewise, if we manage to grind up in the overnight and we can get up to 74.60, again, another potential short from the top side down. All right. Now looking at the Aussie Yen. Now the Aussie Yen has had a couple different plays. This is a level that we mentioned last week. It's been here for a while. On the 4-hour basis, you can see we're very, very high on the curve. Unless it deleted the last one. Again, large emotional response up into a zone. You can see that this one is officially out. So I'll remove this just to keep this one clean. Is this level worth one more hit? And the answer is probably one more. The original zone, I think we see it. Yeah, you can see it. There was the original touch of the zone, right? And what happened was when a new one formed, it kind of erased it, right? When this one got printed right here is where it erased it. But again, there was your original kind of entry. I'm sorry, the original entry was there at 77.46. We've hit it and pushed down. And now because we have a new zone formed, I would say probably I'd still continue to hold this one going forward. I think the level's worth probably one more hit. Again, you can use the smaller one here, or you can go a little bit more conservative higher. Basically, if you're going to take the aggressive entry on this one, you'd be looking up at 77.44. Downside, this one's a little harder. We've had the wicks here, and we had a nice turnaround, but it was kind of coming off this area. And I will say there are some buyers down here. In here, where this kind of turned and shot back up again. Is it the cleanest entry? Not so much, right? And that's kind of where we're running into a little bit of problem. So, if you take anything short, I would say be cautious. This 76.94-ish area. You can see how the wicks are going higher. Again, buyer stepped in, buyer stepped in, buyer stepped in. Whenever you see this type of pattern, this kind of sawtooth pattern, typically signifies there are buyers sitting down there. So right now, I have to say on an intraday basis, I'd be looking at something along these lines is where I'm looking for my short-term and my long-term bias, right? Top and bottom. Right now, we're kind of in the middle, and you can see we keep chopping. Here's the top side, help, and here's the bottom side help, and we're just going sideways. So, this one is almost like, I don't know. I would like to say, if you know how to set an alert in your software, again, setting an alert here and setting an alert kind of down here in this area isn't necessarily a bad thing, and then walk away and do other things, right? Have it alert you, send an alert to your phone, email you, whatever it is. I think those are the two cleanest, highest probability targets. And right now we're kind of just messing around, floating in the middle. So again, not much movement. Now, Euro Yen. All right. Again, watching paint dry. If you take these peaks, we're only talking about 17 pips. There's just no news, and obviously the euro is the pound is not necessarily a driving force right now. So, on a bigger scale, yes, we are still at the top. Our level up here at 26.56 is good for probably one more hit, but we got a little bit more room to clear. And again, we're looking more for getting short this position. Brexit will move this a little bit, but I wouldn't say, I don't know, is it really the best? I don't know. Brexit isn't going to move this as much as it moves the pound. So while it's opportunity, I wouldn't say that this is like, hey, listen, this is the best thing ever. You need to trade this. If you don't, you're crazy. No, it's not. It's not one of those situations. Unfortunately, it's you got to be able to kind of get this one and I don't know, time it correctly. Time it correctly is probably the best bet. All right. So let's go over and look at the pound. So this is something that we talked about this morning. I'll drop it back down to the 15-minute. You guys can see here is that emotional push forward that we talked about, right? And again, this kicked in right at the close of the UK business day, right? Not the end of the full day, right? But the Tuesday afternoon, and we talked about how, wow, there was a 98 pip move in less than 15 minutes. All right. Now, any type of parabolic move, what do we expect to see? We expect to see a retracement, a rollover, a pushback to the downside. Well, that's exactly what it gave us. And what did it do? It dropped 73 pips within that time frame. Now, since that time, again, we knew that this was an area where buyers stepped in. Obviously, that was a great move. There was a parabolic move down, a grab from that level, and a rally back up, and we just hit that level again, and you're already starting to see it roll over as sellers have stepped in. At this point, you can see that we had one high, and again, we can kind of take it here, and we can even speed it up if you really want, and we can drop it down to this level, okay? So again, starting to see that rollover off a prior area of sellers. We didn't go as high. Again, a large emotional kind of push higher. Again, I would say that this is coming back lower. Now, as far as, again, the safer kind of areas that we're looking at, 140.28 is important to look at for the rest of the week, as is 137.45. Either of those two kind of bring us at the extreme range of the curves, but obviously on the intraday basis, again, we could drop it down to a 30. You can see that these things have been, been pretty nice little levels. And again, ran right into an area of demand, right off a parabolic move. There's your one trade, and then trade number two would be right there. So again, it's been kind of predictable at this point. We didn't know when Brexit was coming, but we knew that if we did get the emotional burst, look for a retracement. And again, look for those areas of buyers. So it's been two set up on that. Now, pound dollar. Pound dollar is pretty much the same. Let me delete these off. Let's see, take that off. Take that off. That was for a different presentation. All right, so right now, same thing. We're kind of floating around the middle. You can see this in a 4-hour, all the chop back and forth, like the craziness, right? And as you can see, there's what Brexit looked like, right? Up, down, left, right, sideways, right? Nothing, 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 nothing. Boom, boom, and we're in the same exact spot. So unfortunately, that's kind of what you have to deal with here. Now, this spike as well, let's see. Here's the 8 o'clock spike. This was 110 pips higher. And kind of the same thing. We'll go back up to the 15-minute. Here's your emotional move. Let's take this off. You can see here is a rally up, a base sideways where sellers have stepped in and pushed it lower. And if we bracket that off, you guys can see exactly what we ran into. Large emotional move, right? Highly emotional Brexit into an area of sellers. Parabolic move back down to the start of the order, like basically the origin of the move, and then boom, another trade off there, and we're having the same kind of roller up top. So I would say the rest of the afternoon, I'm probably also bearish this position. Not that I would see a lot of really strength coming with the dollar, but what I would say is this is probably more just weakness right now with the pound than anything else. Now, look at this one for something that's actually tradable. I think if we drop to the 30-minute, there's a level down here that is not bad. 132.50. You can see we had a large drop and it tagged a zone down here, right? We had a zone that we had marked off. The bottom side of that, you guys can see the bottom of this ended up tagging this. But now we're going to use this new level. It dropped, it based, it popped up. And again, you guys have seen this pattern. I mentioned this multiple times, right? Here, I'll draw it right next to it so you can see it, right? There's your up, there's your down. In your confirmation, it does not go as low. Your entry is established by your risk, and then boom, it took off, right? Up, down, and boom. I would probably say look for this to come back down, and if we can get another one of these kind of confirmation patterns, I do think 132.50 would be a viable area to take long again. I think time of day also matters, the way, how you would play it. It is obviously Tuesday, so, you got to kind of keep knockouts on your radar because of the longer duration. Call spreads are in there as well, but if we can hit that area around a UK open, that could also be a good opportunity to be able to take this long and get something, a bit, a bigger mover, right, to the top side. But with that said, I do believe if the full details of Brexit come out, it's stamped completely like that's it, we're in, everything's good, yeah. I do think we will have another big, punch higher. And I do think levels for a larger time frame turnover would still be 135.84. Now, euro pound. Euro pound, here was our kind of our early morning. Now, again, this is on the 15-minute. The Brexit news was right here. And what did Brexit do? There's your move down 62 pips in less than 15 minutes. It came back, and what did it do? Emotional response, parabolic move all the way back up, grab the level again because the sellers are still there, and boom, drop back down to the second time. So, would I use 91.06 as a level? There may be one more trade there depending on what time we hit it. It's been pretty good thus far, but again, it is in the middle of a range and it was caused from Brexit news. At this point, what I'm still looking for is a further collapse down. Again, I do think more pound strength will come in with the more details that come out from this deal. Of a break of 90.39, I am looking for this one to drop lower down into the, the 90.11 or the 90 flat range. The 90 flat range should be approximately in this level right here. I think that's a pretty decent level. But again, for those of you that know the parabolic retracement strategy that we've done webinars for, and if you haven't seen the webinars, what I would recommend is you guys go back, look at Nadex's YouTube page. I believe there's a couple of them there on the YouTube page, the parabolic retracement strategy. This is exactly it, right? And again, huge emotional response down, 60 pips back up. There's your entry, and then move 54 pips to the downside. So nice little setup here, but 91.09 and 90.39, I think, are both things you need to keep on your radar. Now, euro dollar. Euro dollar, this is the 30-minute chart. It's just kind of blah. I was looking, this is actually a line I drew for my students. And I said, hey, listen, if we can get the UK Open right here, actually, let's see. Did I have it marked on the UK Open? No, the UK Open is here. It's right there. So I missed it by just a little bit. And what I told him is if we could be down at this level, the 120.89 at the UK Open, look for a punch higher. And it did. It went higher. I missed the entry by just a little bit. Looks like I missed it by 1.9 pips. All right. But again, the only kind of catalyst and movement we've had in this one has really been off the open and kind of just readjusting. Besides that, you can see that it really has spent so much time here, hasn't really rolled over. Larger time frame, you can see we are kind of sitting right at that top, and we're boxed in by that 2170-ish number. So it's kind of in a hard position, being in that no man's land right now is not the best thing for most currencies. And again, having a little cap right on top, 2171, has not really been great. So again, intraday small levels. Again, we need a U.S. catalyst or a European catalyst that really have this thing jump much more than that. But yeah, look for a UK Open tomorrow, which would be, let's see, right here would be our kind of UK line. All right, so if we can pop back down over here, we're good to go for probably one more. All right, now dollar CAD. I'll remove these levels. I told him that right now we're just consolidating in. I don't expect it to move much, and it didn't. It kind of trapped top and bottom. But there we go. Okay. Last week for you guys, I mentioned, hey, listen, here was our 4 hour. We had two different zones in here. We were talking about. I said I wouldn't be surprised the way that this is grinding with all the news and everything else we've seen, with the way that oil's reacting, again, going higher. It's helping the Canadian dollar out. If we had to base when we got down to this level, and we did, we based for basically 16 hours, and then we took our drop, and I almost hit it to the T. I missed it by 1 bar. We dropped, and now we're kind of basing lower. Now, on the daily, you can see this is what it looks like. We are bouncing off of an area of demand right now. Question is this a true reversal point, or are we just holding? This is a difficult one because on a purely technical level, this is a bounce area. It's the last time that daily buyers have stepped in. On a 4 hour level, and I'll make this a little bit bigger so you can see it, and I'll pop it here. You can see that this is where the level is, right? I know sometimes it gets a little bit clear that's where the daily level is. Now we haven't driven super deep into the level. We're still in the very, very top. Kind of one of those things. It's fighting. Buyers have stepped in, but sellers have also stepped in. Again, lack of any true U.S. data or direction is not really helping us trade this pair. Obviously, oil is affecting the Canadian dollar a little bit. I still am a firm believer that the market knows that, again, I think the market believes that we will get another stimulus. Okay, everybody talks about how bad things are. President-elect has talked about how we're going to lock the U.S. down for I forget what it was, like 3 weeks or whatever. I forget how many weeks he said that we need to lock down for. But we're going to lock down, and that's going to get us through. It's kind of like our 14 days of whatever. He wants to do like 180 days or 80 days or something like that. I forget what it was, but it's a couple weeks. That's not going to be great for the U.S. dollar. I believe there will be if we do that, there will be stimulus associated with it, which will bring kind of more extreme weakness in. So it's one of those things, I am not typically a fundamental-based trader. I just typically trade off what I see in technical charts. But something like, something on the level of a pandemic and surprise interest rate changes, things like that, those are fundamental factors. I would almost consider like a pandemic, it's kind of like a hurricane. Like you can't predict it, you can't stop it. You're not going to beat Mother Nature. This is kind of like one of those Mother Nature clauses at this point. I do think it's coming. I am pretty sure at this point we will get some type of stimulus in there. I do think it will drive this position lower. And for this week, not a whole lot tradable for the dollar CAD. Okay. Now dollar Swiss. Here's where our 4 hour level was. This one is, and again, 4 hour chart. We've been kind of stuck, right, in this level. Going back to, I don't know, the 3rd, right? December 3rd, we took that last big drop down. We've really been kind of stuck there, right? We're in kind of the middle range, no man's land. We need price to come down, but for me, dollar Swiss is at 87.91. The Swiss has been kind of the the benefactor of really no news is good news, right? We know U.S. cases are spiking. We know the economy is getting funky. We know that the European Union's having issues. We know that the UK has Brexit. We haven't heard a peep out of the Swiss. And again, that's why we kind of seem, we can kind of see some strength coming in. So I think this one needs to move a bit lower. It's got about 100 pips. It's got, right now, the daily ATR on this pair is down to 55. So it's still technically got about 2 days worth of movement to be able to go anywhere, right? Yeah, and you can see right now, even on an hourly, it hasn't moved for 4 hours. We had a small kind of intraday area that there was a potential long for, just because it got in lower range and it's done nothing. It's holding and sitting there. So again, December, lack of volatility, it's really hurting the Swiss. Now, we drew this last week talking about coming into this level. Here's that same pattern, and I'll adjust this. The black line is where our target, I should have drawn the target to. That's where it should be, because that's where the big drop occurred. But again, here's that same pattern, right? Here's the level. We pushed up. We came back and we retested that level where buyers had stepped in the past, and then boom, there's where your response was. And you guys can see we came up and touched it. Now we're kind of in the same level. I wouldn't say that this one is the strongest of areas. We've gotten a little bit of a drop. We've gotten a little bit of a hit, but you can see, even on the 30-minute, is there any really explosive movement from, yesterday till today? And the answer is no. This is flat. Okay. If we are trading the markets, we would like to see a little bit more movement. Again, are there ways to play this? Could you do kind of the pinch technique? I know I've brought it up before. I know Dan has brought it up before about there's different ways to play some of these. Yeah, unfortunately, you need a little bit of premium, and there's just not a lot in this one. So, there's a small area, and I can put it on the hourly. You guys can see that there's a small area here that, you could potentially trade off of. But again, we're sitting in this kind of no man's land right now, not a lot of movement. We're still waiting for a bit more. And I would say right now, kind of our extreme ranges, actually, I'm with this one. Our extreme kind of zones that we're looking for decent setups would be 104.61 and 103.75. All right. And again, this one is not very exciting right now. It's at, daily. This one is an ATR of 49 pips, so I think it's the smallest ATR of all the currency pairs right now. It's getting a little thin there, right? All right, so gold. Here's what we got on gold. Here was that level last week, and I don't know if you guys remember when we drew this, right? We had this level sitting here, right? And we say, hey, listen, we're looking for kind of a punch above. We'd like to see a retrace in. Unfortunately, the retrace didn't come. It spent a lot of time, and that's why we were waiting for a retrace. We didn't get it, and it drove higher and ended up going all the way back up again. So it's one of those ones. Had you not been waiting for the confirmation entry, I like the confirmation entries because, again, it gives me a little bit more certainty. Not that there's ever 100% certainty, but I like seeing that pattern. In this case, you could say, well, if I would have just took it on the break, great. But then you would have got stopped out here and got stopped out here. I like the confirmation. So, it gets thrown in the basket as we missed the opportunity. We had the trade drawn long. It ended up going long, and we just missed it. And right now, as you guys can see, this is an area that we've talked about before. The 1870, it's a level where we've seen sellers step in. It has punched in it, pulled back, and we're in that level right now. I do believe that this week we could have the potential of breaking through this. The reason why is because we have that CPI number on Thursday. The CPI number is expected to tick up. That is showing that there is some bit of price inflation. That's what gold has been waiting for. This was the, yep, we got nothing. And all of a sudden it's like, oh, inflation's coming back? Okay, good. But we haven't really seen it. So if we have a negative inflation number, and that if the CPI data is negative, I would not be surprised for this to kind of roll back down again, in which case we'd be looking down in here. Right now, it's in a 4-hour level. It's having some issues. You can see that it's kind of poked its head up in here, but there's a few different levels up in here. The only thing that I have that right now that I would say that is saving grace for this pair, and I'll just steal this one over, is this. Right? We have a decent level of basing. Change this to, I'll change to blue. We have a decent level of basing and some testing. So I think it's going to continue to make kind of punches forward at this point. Put that back there. Again, inflation would be great. We'll see how much farther we can grind, but I will be keeping my eye on this one because, again, see this straight up with nothing. This is an emotional move with no pullbacks, no nothing. Starting at what, 6 o'clock in the morning, 7 o'clock. I wouldn't say there's any data that justifies this bit of movement. So, one trade that I am looking for, and I do have an alert set, would be a short if we're able to break through there with a confirmation entry. Right now, though, I would say we need to find those sellers. We need, this is going to continue to grind higher. But, again, if we're able to get a break of that level, look for a Harry Potter trade to the downside. Okay. And that would look something along these lines. And again, if it comes down and bounces, guess what? There's no trade. No harm, no foul. All right. No harm, no foul. But look for that one to turn. Silver, okay, silver had some problems. So we had, let's go back up to this was on the 4-hour. Silver, we had a level at 24.91, okay? We got super close today. We got super close. This one came up to 86, 87, so we missed it by 5 cents, and then it drove all the way back down again. You guys can see here that not only did we miss just by a little tiny bit here, right up here, it actually drove down and actually tagged our profit target. So kind of frustrating when that happens, when you miss that close, but it's going to happen. There's not a whole lot we can do about it. I would say you can probably, we'll probably do it over here. You could probably set up a similar trade. Again, a large emotional response. Let's see on the 30-minute. Yeah, we could probably shrink that a little bit back into this level. Okay. And this is, I would kind of do the same thing here. Actually, let me bring another one down here. Let's change this one. Change that to a yellow. Pull in. We're going to move this now just down here. Okay. Kind of same thinking. Harry Potter dropped to the downside, and the reason why I like this one as well is because, again, a huge one up candle, gigantic move, and the 1 to 3 is before this little base area. So, if it hits it again, and again, it's already hit it once, it's hit it twice. If it hits it again, it goes higher. If it does this, again, no harm, no foul, right? No harm, no foul. We didn't get in a position. We need to be able to see the same type of movement, but again, we want to see some type of a base, a drop, and then a pullback is what we're looking for. And then a push to the downside is kind of what we're looking for. All right. So those are your alternatives here. Let me go up and let me grab, where is it? Right here. Let's drag this and bring this down. So here's what oil looks like. Again, oil's been pretty interesting. Right now, it's been just kind of chopping sideways on the hourly, nothing spectacular. As you can see, yesterday, this was a level that we had talked about and we mentioned. Again, we've seen sellers step in here in the past, and again, it was a tested level. Here's your rally, there's your base, there's your drop, there's your test right there, and you can see that super, I guess yesterday, super fast rally up, again, jumping about 50 cents, and then boom, we rolled back over, and now we're kind of stuck in that same level. Again, here's where the curve was drawn last week. I remember when we kind of drug this over, I was a little bit kind of fumbling with it. But again, it's where sellers have stepped in. They've stepped in once, they've stepped in twice again. We got to use that as our extreme level. Taking that middle quadrant, or I guess it's a quadrant now because I had 2 colors. Again, we're still kind of in the bearish area, right? We're on the top half, kind of again, slightly bearish biased, right? Again, levels where I think buyers may potentially step in, or if you're looking to get short, would be 44.60. And again, 43.60 is one we've had here for a while. This level here, this nice punch off is not only a target, but I wait for a target and then a confirmation bounce off of it. And vice versa, going a little bit higher, we'll go up to a 4-hour. You can see that we have levels, again, just above here at 47.24. Now, the oil inventory report is tomorrow. I don't believe, let me see. Oops, no, not that. Cancel. Apply filter. I don't think, okay, they have given us a forecast for tomorrow. Here is our oil forecast for tomorrow. I don't know if you guys can see this or not. Right here. I guess I don't need this one. Oh, no, they didn't. I was looking at the other one. So, no, we don't actually have our forecasted number yet. Where is it? Today, tomorrow. Oh, yeah, there is a forecast. So, minus 0.9. So, they're expecting oil inventory to be down again. Again, which may provide a little bit of a boost, but again, I don't really think this is going to be too much. I do think this will be a miss, and here's why. So as you guys know, Thanksgiving was not last week, but the week before. Okay, so the inventory report we had last week was kind of what it looked like during the week of Thanksgiving. Okay, all the traveling that happened over the weekend. Again, now all those tanks were used up. New deliveries had to come last week, and this will be kind of the post-Thanksgiving, what did we miss type scenario. Okay, so The fact that they're saying it's only a minus 9 million barrels drain, I'm here again looking at the COVID numbers and looking at kind of the news talking about how way more people traveled than they should have. Um, I feel like this is due for a miss. Okay. What I would do is I would watch kind of early, late tonight, kind of see where markets are moving. I do expect this to adjust itself before the oil inventory report tomorrow. So again, that's going to be how you play this. But if we do not have a big one of these prices in like the Europe, big move in price before the European market, or I'm sorry, during the European market, again, we tend to have a bit more run tomorrow. So, it may, when we wake up and look at it tomorrow, it may have already happened. Um, what I will do, I'll make this commitment to you guys. I will make sure tomorrow morning for the Nadex presentation, I will make sure to pull up oil because, again, the oil inventory report comes out at 10:30, and when we do the presentation at 9 a.m., that'll give us an opportunity to kind of do some analysis in the morning on this one, and that'll be a better place to play it. If you can't make it, I'd still be looking for 46.40. If we have a punch, like a really a huge spike higher, again, a huge spike higher into 47.25 would be another area I'd be willing to get short, and vice versa to the downside. I think we got a little bit more. We'd have to drop like $2, $3. I don't think we're dropping that far in that time frame, but 44.60 would be an area where I could, see a potential bounce on it. Thank you. Okay. I'm not sure what those questions are. All right. So with that said, let's go back over to here. That's it for today, guys. If you mark your calendars for December 15th, we will be on next week as well. If you have any questions, you guys can hit the website. You can catch me on Twitch. And again, typically 9:30 in the morning Eastern, I do the live presentations. I will be tomorrow as well. And then if you have any questions about anything that I mentioned, again, support@keeptradingsimple.com is my email address, and you're more than welcome to catch me there. YouTube, I don't really upload as much over there right now, but with that said, thank you for joining me today. I hope to catch many of you tomorrow morning at 9 a.m. And remember, we do those every single morning at 9 a.m. where we go over kind of the hottest opportunity of the morning. You guys have a great trading day, and I'll catch you guys tomorrow morning.